Hello students, good morning, good afternoon, good evening, depending upon when you are watching this video lecture. In the earlier session related to bank reconciliation statement, we discussed about some of the do's and don'ts of learning this topic and how the thought process should be in relation to preparation of BRS. Also, how important this topic is. Definitely minimum 5 marks and most probably 10 marks can be expected from this, which ideally should be scored full if we have clarity on the thought process of what is actually happening. Also, we solved some of the questions related to BRS to start with, and let us continue solving some more questions. Some of them are 10 marks questions. Whatever the number of questions and whatever the size of the questions may be, ultimately what matters is the logic behind the preparation of BRS and going step by step, not trying to print the answer, which is not possible, and not thinking about other points while addressing one point. So, what are the basic concepts related to BRS? Already we discussed in the earlier session. Let us apply those concepts in a little more detailed manner in reasonably bigger questions in the current session. Read this question. Question number 4. On 30th September 2019, the bank account of Neil, according to the bank column of the cash book. So, the balance that is given is according to cash book, our books of accounts. And it was overdrawn to the extent of 8124. On the same date, the bank statement showed a debit balance of 41,516 in favor of Neil. Ideally, the bank statement, if it is in favor of Neil, it should be credit balance. If it is an account as such. But here it is given as debit balance. So whether it is debit balance or credit balance, what is the reality of this? We can come to know after we prepare the bank reconciliation statement. And definitely we can start with this balance as per cash book, which is negative balance 8,124, which is overdrawn. An examination of the cash book and bank statement reveals the following information. Of course, so many points are there. So, what is required here is to show appropriate rectifications which are required in the cash book of Neil. So, we have to prepare a revised cash book or amended cash book, whatever we call it. So, those things have to be shown in the cash book, all the rectifications if they are required to be made to arrive at the correct balance on 30th September 2019. That is the first thing. So we have to prepare a revised cash book. It is clearly asked in the question. And the BRS is prepared on this date, which is 30th September 2019. On that date only, we have to prepare this revised cash book or amended cash book. After that, we have to prepare a bank reconciliation statement also as on that date. That is a requirement. Again, as far as presentation is concerned, definitely you have to take care of that in the examination conditions with a proper heading. What will be the heading? Bank reconciliation statement as on 30th September 2019. That should be the heading for bank reconciliation statement. As far as the revised cash book is concerned, you can call it amended cash book or revised cash book. So first we have to prepare a revised cash book. Of course, with proper entries and proper descriptions in the examination. But here we are only looking at the treatment part. Presentation part you have to take care of. So revised cash book or amended cash book you can prepare. So what is the starting point here? Overdraft balance of 8124. So when the cash book is starting with a negative balance in our own cash book will be debit balance or credit balance? It will be credit balance. We know that because it is a liability. So it should be starting from credit side. How much is the credit balance to start with? 8124. That is the starting point. By balance brought down 8124. Then various things will come. We have to check whether we can rectify them. Is the mistake from our side or from the bank side? If it is from bank side, we cannot rectify anything in the cash book. If it is from our side, we can do something. If there is no mistake, it is only a matter of time, then also we can't do anything. That will be shown in the bank reconciliation statement. Look at each of the points one by one, which can be shown in the revised cash book, which cannot be shown in the revised cash book. We should be very clear about it. First point, a check for 26,28,000 rupees deposited on 29th September 2019 was credited by the bank only on 3rd October 2019. It is just a timing issue. Though we are preparing a BRS on 30th September, as on that date, this check would have been already debited to our cash book. But the same thing is not credited by the bank on 30th September because it takes some time. So that will be a reconciliation item which we have to show in the BRS later. We cannot do anything for that. There is no mistake in that. Whatever we have to do, we did correctly only. Second point, a payment by check for 32,000 has been entered twice in the cash book. This is a mistake. Payment 32,000 entered twice means payments will be on the credit side. Deposits will be on the debit side, withdrawals will be on the credit side. So the payment of 32,000 credited in our cash book 2 times. So we have to rectify that, means we have to cancel that credit. How can you cancel that credit? By debiting it. So rectification will be to cancel that excess credit earlier done of 32,000. Once it should have been done, but by mistake it was done twice. So it has to be nullified by debiting the cash book. 32,000 debited. Done. Point number 3. On 29th September 2019, bank credited an amount of 2,34,800 rupees received from a customer of Neil, but the advice was not received by Neil until 1st October. It's okay, it's not a mistake, it is a timing difference, but still, can we rectify our cash book with that? Yes, we can. Because now we know it. Earlier we did not know. Because bank intimated us little late. Though the deposit happened on 29th of September, we got intimation now only. That's okay. Since we know that, now we can rectify our cash book with that. So what has to be done here? 2,34,800 rupees we had received actually, which we did not record so far. Now we have to record it. 234,800 to be debited. It's a late intimation. That's okay. Earlier we did not know. Now we know. So now let us record it in the cash book, because it is a deposit that should be debited in our cash book. 2,34,800. Done. Same way, bank charges 1160 were not entered in cash book. Why? Again, we didn't know then. Now we know. Now we can record that. 1160. Is it a deposit or withdrawal? Bank charges. So withdrawal. So definitely it has to be credited in our cash book. So 1160. That is also treated. Next. On 6th of September 2019, bank credited 40,000 to Neil in error. So it is not our mistake. Can we do anything in our cash book with that? No, we can't do anything because it is not our mistake. It is bank's mistake. So that is definitely not something which we can rectify. So we can't do anything in the cash book. Then the 6th point. A bill of exchange of 2,80,000 rupees was discounted by Neil with his bank. This bill was dishonored on 20th September 2019, but no entry had been made in the books of Neil. So again, it is our mistake. Maybe we did not know the dishonor, whatever the reason may be, but we did not definitely record the dishonor. See, when we originally discounted this bill, we would have already debited our cash book with whatever amount we would have received from bank after discount. That's okay. But still, when the bill is dishonored now, definitely we are supposed to pay that 2,80,000 rupees to bank, not the amount that would have been received after discount. We have to pay full amount to the bank. How much? 2,80,000. So this has to be credited in the revised cash book, 2,80,000, because we are supposed to pay this to the bank, entire 2,80,000, which we should have recorded already, but it was not recorded. No entry had been made earlier. Now we are making it. Next, seventh point again is a timing difference. Checks issued on 30th September but not yet presented for payment on that date. What we can do? We can't do anything. We did our job. We issued them. We would have already created our cash book. But those people who received checks from us, they did not present it for payment. That's okay. It will stay as a reconciliation item till they present for payment. When they will do that, we don't know. Till 3 months, there is a possibility for them. Till that time, it will be in the reconciliation only. Because we are preparing BRS on 30th September 2019, that will be an item of reconciliation for sure. So these are the only items which can be rectified in the cash book. So while preparing the revised cash book, these all items can be entered there. Now let us check what is the total of this. 280 plus 1160 plus 8124. Bigger total is 2,89,284. 2,89,284. So how much is the balance now? 234,800 minus 32,000. If you take out 22,484. Which balance is this? It is still a credit balance. Means it is still an overdraft balance only. 22,484 is the overdraft balance, correct overdraft balance as per revised cash book. That can be our starting point for the BRS. Of course, with a proper statement, bank reconciliation statement as on 30th September 2019. What should be the starting point? Simply negative amount. 22,484. Overdraft means negative balance, nothing more. So we don't have to change our thought process just because the balance is overdraft. Same process can be followed, but only starting point is negative. That's okay. Now look at the items which we did not treat already. First point was that a check was deposited on 29th September, but bank credited it only on 3rd October because of time that is taken by the bank. That means we would have already debited in our cash book. So cash book balance is already high because of this. Bank did not credit it, so passbook balance is low. But starting point was what for us? We have the balance as per cash book. So we have cash book balance here. So because that is a starting point, we have to check the impact on cash book only. It's the first impact on cash book only. Cash book impact was a debit to that, because of which the balance as per cash book would have been already more when compared with the balance as per passbook. So since it is already more, the cash book balance, what we have to do is we have to deduct it, means less. So only two things will be there. Some items to be added, some items to be deducted. So how much is the amount to be deducted here? 26,28,000 should be reduced from the cash book balance, whatever it may be. So that is an item to be deducted. Because of this item, definitely our cash book balance would have been more when compared with bank book balance, because we recorded it, bank did not record it. So that was point number 1. Done. 2, 3, 4 already we treated. Fifth one is about bank. The error was done by bank. So we'll check that after treating the 7th point also and checking the balance with the bank as given in the original starting paragraph. What about this 7th point? Checks issued up to 30th September are there but not presented for payment. Means it is the reverse of the earlier thing. So checks issued means definitely we would have credited our cash book because we paid them. That is a withdrawal. but they are not yet presented means bank did not treat anything of this because the people who received the checks from us did not present them. Nothing wrong here, but it's a timing difference. But whatever it is, because of this 26,52,000 already created in our cash book balance would have been lower. It would have been lower by that amount. If it is already lower, what we should do, simply add 26,52,000. Before going to the final answer, let us just check first of all what is the balance here. 22,484 minus, that is, be careful, minus 22,484 plus 26,52,000 minus 26,28,000. How much is this? 1,516 is there, which is the balance here. But according to the original amount, it was 41,516. Why is that? Because of this item also. So now the point is, this also has to be shown. On 6th September, bank credited 40,000 to nil in error. Okay, this mistake was done by bank. Bank has to rectify that later anyway. But now it will be shown in the BRS. 40,000 rupees bank credited. Bank credited means according to the passbook. First impact is in passbook. According to the passbook, the balance would have been more. Automatically, when according to the passbook balance is more, what we want is second impact, which is cash book. That is the starting point for us. So according to passbook, if the balance is already more by 40,000, according to cash book, the balance will be less or lower by 40,000. Once the balance is already lower by 40,000, if it is already lower, what we have to do is add 40,000, which is an error from the bank side. So what is the final answer now? Should be 41,516, and this is a positive balance if you observe. So it is not a overdraft balance, it is a positive balance. Okay, it's a different story. They should not have used this word debit balance. Just they should have used the word. The bank statement showed a balance of 41,516 in favor of nil. In favor of nil is true now. Debit balance is not true. Since we did not know earlier, we ignored that. Now we know very clearly. It is a favorable balance to nil, which is 41,516, which is a credit balance in passbook from the bank's perspective. From our perspective, it may be debit balance, but for bank's perspective, only bank statement will be there. That is why 41,516 is a favorable balance to nil according to the bank statement as given originally. That's what it is, 41,516. So we don't have to worry about this because already it has matched. Whatever the amount given in the question already matched. That means the purpose of bank reconciliation statement is fulfilled. We already created a revised cash book and we prepared a bank reconciliation statement. Balance as per bank statement in favor of nil is important. In favor of nil is 41,516 as given originally. So that is done. This is how questions have to be approached. Now moving to another question. Question number 5. On 31st March 2020, Mahesh's cash book showed a bank overdraft of 98,700. So that is the starting point. Starting point, yes, we know that. So many points are given, that, etc. What is asked? Prepare a bank reconciliation statement as on 31st March 2020. That's what was asked. So here, there is no particular requirement in relation to preparation of any revised cash book and all, but when a cash book balance is given already, if the passbook balance is given, anyway we cannot do any revised cash book. Because cash book balance is given, we can first revise our cash book if there are any errors which can be rectified now, and after that we can prepare a bank reconciliation statement. That will be a better approach, though it is not asked, because there is a possibility. If there is no possibility, anyway we cannot prepare revised cash book. When we cannot prepare revised cash book? When passbook balance is given. When we don't know what is the balance as per cash book, how can we prepare a revised cash book? We cannot. But here we know the cash book balance, so we can prepare a revised cash book. So let us prepare revised cash book first. Then let us prepare bank reconciliation statement. There is no rule like that, because the question is asking BRS. You can directly prepare BRS also. But generally, for better presentation and better effective answering, we better prepare a revised cash book. After that only, we will prepare a bank reconciliation statement. Again, I am repeating, presentation is something that you have to take care of in the examinations. The methodology of solving questions is what we are looking at now. Let us start with the starting point as usual, which is a overdraft of 98,700. So overdraft, cash book showed overdraft of 98,700. So by balance brought down 98,700. That is the point, starting point. Overdraft is a credit balance because it is a liability, we know that. Now look at various items. Here, first point, read them carefully. Out of the total checks of 8,900 rupees issued on 27th March, of course we are talking about 31st March is the date on which we are doing all this exercise. On 27th March, we issued some checks. Issued is important. Issued means we gave checks, means it is going to be a withdrawal for us. From our bank account, this money should go out. One check of 7,400 was presented for payment on 4th April. That means there is a delay in presentment of this. This we cannot do anything with that because that is not any error or something. It is only a timing difference. Eventually, it will be presented. But till that time, it will stay in BRS. So 7,400 we can deal with only in the bank reconciliation statement. But what about other check? Other check of 1,500 rupees is handed over to the customer, was returned by him, and in lieu of that, a new check of the same amount was issued to him on 1st April. No entry for the return was made. So, there is a point here which is not so correct, but still we don't have to worry about these things. We don't have to question the question. That is one of the points to be always kept in mind. So we are talking about checks issued. Okay, checks issued means normally we issue checks to suppliers. We don't issue checks to customers. We don't know, maybe something happened. Maybe he returned some goods for which we may have to pay. We don't need to know that. So don't worry too much about the customer. Some guy, whoever he may be, we don't care. We issued a check of 1,500. What happened later? He returned that. Why? We don't know. Whatever the reasons they are. He returned that check. Maybe we forgot to sign. Maybe there was some mistake or some overwriting was there. Whatever the reason, we don't care. He returned it. But we issued this 1,500 rupees check. That means we would have already created our cash book with this 1,500. But he returned it. In lieu of that, we issued a fresh check on 1st April. But no entry for the return was made. So the point is, unnecessarily, for all this nonsense whatever happened, unnecessarily we credited our cash book with 1,500. As we have issued that. But actually that is already returned also. That means effectively nothing happened till 31st March. Even though we issued a fresh check, that is not before 31st March. That happened on 1st April. That happens later. We are not bothered about that. So far what happened? Simply we gave him, he gave it back. So nothing happened. But what we did in our cash book, naturally we would have created this 1,500 because we issued this check. So what we should do now? Now we have to rectify that by debiting it. Because unnecessarily we created, though there was no real check. As on 31st March, actually there is no check that is existing also. We gave and he gave it back. So when we gave it, we would have recorded, but when he gave it back, we did not enter that in the cash book. We had no entry for the return made in the cash book. So 1,500 we treated in the revised cash book. That is first point. But of course, remember, this 7,400 definitely has to be also treated. If you are in a doubt that maybe we will forget that, you can leave some space particularly for the revised cash book, and then you can also prepare a bank reconciliation statement with various items. Whichever we know items, we can just put them. Which items we don't know, we can come to them later. That's okay. So anyway, starting point will be the balance as per cash book balance. Whatever is that, we don't know, we'll come to that. There will be only two things. Certain things to be added, certain things to be deducted. So let us see this one so that we will not forget it. 7,400, what happened? We issued this check, but this was presented for payment latter. So we issued means definitely we would have credited our cash book, which is correct, nothing wrong with that. But the point is, since it was not yet presented before this date of 31st March, the bank would not even know that there is a check like that. That means bank would not have entered anything in the bank statement or passbook. So there is a difference of 7,400. Where is the difference? So our balance as per cash book would have been lower by 7,400 because of this entry which we would have already passed on 27th March. So cash book balance is already lower because of this. When it is already lower, what we should do? Simply add 7,400. That's it. That is the treatment for first point. Second point. Out of the total cash and checks of 6,800 deposited in the bank on 24th March, one check of 2,600 was cleared on 3rd April. Other check of 500 was returned dishonored by the bank on 4th April. So both of them are there. When we deposited these checks into the bank, 6,800 rupees worth of checks, in our cash book we would have recorded that, yes, big boss, we got the money already. 6,800 would have been debited already. But on 31st March, nothing has been cleared. So 2,600 also cleared later. Dishonor also happened later only. That's okay. Dishonor we cannot enter that now because the dishonor also did not happen on 31st March. It happened later. So definitely both of them here 2,600 and 500. Both of them we would have debited our cash book, but bank would not have treated anything on 31st March. So when we debited our cash book balance would have been already higher. Because of this, what we have to do when it is already higher? We have to reduce it. 2,600 and 500, both of them. 2,600, 500. Both of them should be reduced from the cash book balance because cash book balance would have been higher by this amount already. But by the way, this 6,800 is not relevant because these are only part of 6,800. That automatically means remaining checks are all cleared. There is no problem with them. But earlier 8,900 exactly was matching. That was incidental. 7,400, 1,500, only 2 checks were there about the issued checks. We treated both of them. But here 6,800 is the total amount of checks that is deposited. Out of that, only problem is with these 2 checks. Others would have been already cleared, no problem with them. When there is no problem, what should be done with them? Nothing. Only we have to treat 2,600 and 500. That's all. Both of them would have debited cash book, because of which cash book balance would have been already higher. Because it is already higher, we have to reduce it. 2,600 and 500, that's what we did, less. Next, point number 3. Bank charges 35. Bank interest 2860 charged by the bank appearing in the passbook, not yet recorded in the cash book. Now we can record because anyway we are preparing revised cash book. So 35, 2860. Both are charged by the bank. So that means both are withdrawals. 35, 2860. So 35, 2860. Both have to be credited in our cash book because they are all withdrawals. Both of them. We are now just recording what is supposed to be recorded. Next, 4th point. A check deposited in his another account of 1550 wrongly credited to this account by the bank. Bank did this mistake. So can we rectify this in our cash book? No, we cannot. But it will be a reconciliation item. So what happened actually? First impact is in the bank, means in the passbook. What happened? Wrongly credited to this account, which is related to another account. So bank has wrongly credited this amount to this account, means passbook balance because of this would have been already higher because the bank wrongly credited to this account. Passbook balance is already higher. Passbook balance is higher means automatically cash book balance is lower. So what we have to do? Add 1550. It's a mistake. That bank has to rectify later, but till that time it will stay in the bank reconciliation statement. So passbook balance for this account is unnecessarily higher because of the wrong credit done by the bank. Because of the passbook balance being higher, cash book balance is lower because our starting point is cash book balance. We have to always think from that point of view. Since cash book balance is lower because of this, we have to add it. That's what we did. Then point number 5. A check for 800 rupees drawn on this account was wrongly debited in another account by the bank. It's a reverse of this. Drawn means we have issued a check from this account. Issued a check of 800. What the bank is supposed to do, they should have debited this account, but they debited another account by mistake. So because of this also passbook balance is higher, because bank has not debited 800 rupees to this account, which should have been done. Wrongly it debited to another account. So the debit which is supposed to be done on this account is not done, which means in the passbook or bank balance according to bank statement of this account, the balance is higher because of this mistake. When the passbook balance is higher, cash book balance is lower. That means what we have to do? Add 800. Then a debit of 3,500 rupees appearing in the bank statement for an unpaid check returned for being out of date had been redated and deposited in the bank account again on 5th April 2020. Anyway, there is a debit of 3,500 appearing in the bank statement for an unpaid check returned for being out of date. Means definitely in the bank account or bank statement there was a debit. Means it is a withdrawal. That's a check which would have been issued. And it had been redated later and deposited in the bank account again on 5th of April. In the meantime, what would have happened? Definitely 3,500 rupees for a check which was unpaid and returned being out of date. So understand the story very clearly. First of all, this check we would have deposited in the bank. Then definitely our cash book we would have debited. Afterwards, that check was like dishonored because it is out of date. Is as good as dishonored, returned. What the bank would have done? It would have debited. That's what it did. But we have not done that yet. So what happened because of this already? 3,500 rupees we would have assumed, or we would have already debited the amount in the cash book. And when the return happened, we did not record that. What we can do now? We can record it now. So this is the return of that which happened, 3,500. Bank recorded correctly. Bank recorded correctly by debiting in the bank statement because of the return. But anyway, redated, deposited again later, that doesn't matter to us. That happens in future because we are preparing the statement on 31st March. After that, whatever the rectification of things happens, that is none of our business. As of now, what has happened? Originally, we deposited a check in the bank. That means we would have debited our cash book. Bank would have credited in the passbook. Then, return happened. What the bank did? Promptly debited the passbook. We did not do the entry in our cash book. That we are doing now, which is to credit the cash book. That is 3,500. It's as good as a check dishonored. Next. Bank allowed interest on allowed means it is a deposit, which we might not know that. Now we know that. So definitely we can record it now. How much is that? 1,000 rupees interest is deposit. So we have to debit it now, which we did not do earlier. Now the 8th point says a customer who received a cash discount of 4% on his account of 1 lakh paid a check on 20th of March. The cashier erroneously entered the gross amount in the bank column of the cash book. Ideally, he should have entered only 96,000 because that is the amount that is received. 4,000 he should have debited to the discount allowed. But here what he did erroneously, entire 1 lakh rupees he debited to cash book. In that, how much is the error? Error is only 4,000. So 96,000 should have been debited. He debited 1 lakh. So 4,000 extra he debited. What we should do now to cancel that extra debit? We should credit this. So 4,000 has to be rectified by crediting the cash book. These are the various items what we have. So now let us check what is the balance. You have to do the totaling and all perfectly in the examination. Here we are just doing the calculation. So what is the overdraft balance here? 1,05,000 5,595. That is the starting point. 1,05,595. Then after doing all the plus and minus, what will be the final amount? By the way, you have to start with the negative always. 1 lakh minus 105,595, that is the starting point. Plus 7,400 plus 1,550 plus 800 minus 2,600 minus 500. So according to the bank passbook, the overdraft balance, because it is also negative, should have been 98,945. What is that? Balance as per passbook. That is passbook balance. Negative means overdraft. So nothing else. Don't have to separately think about overdrafts, etc. Overdraft is nothing but negative balance. Remaining things are all same. 98,945 is the passbook balance. I think here the calculation is wrong. This is not 105,595. Rather it is 106,595. Calculations. Recheck that. 98,700 plus 35 plus 2860 plus 35 plus 4 minus 1500 minus 1000. 106,595. So 106,595. So start with that. Minus 106,595 plus 7,400 plus 1,550 plus 800 minus 2,600 minus 500. It should be 99,945. That is the correct answer. 99,945. That's it. That is the bank reconciliation statement in this scenario. 99,945. Yeah. So that was question number 5, which is a 10 marks question. So revised cash book, bank reconciliation statement have to be prepared. Of course, the final balance should match. Calculations have to be done carefully. Earlier, there was a miscalculation. So correct answer is 99,945. That was question number 5. Now let's move on to question number 6. From the following information, as on 31st March 2020, prepare a bank reconciliation statement after making necessary adjustments in the cash book. So definitely we have to prepare a revised cash book. Same way. Also, we have to prepare a bank reconciliation statement. So let us start with whatever the information is available. Bank balance as per cash book, debit balance. Debit balance is a favorable balance, 32 lakhs 50,000. So 32 lakhs 50,000 to balance brought down 32 lakhs 50,000. Next, checks deposited but not yet credited. Deposited but not yet credited means we would have debited our cash book, because of which our cash book balance would have been more. But bank has not yet credited. Why? Because the checks were not yet presented maybe. So because of that, passbook balance will be low, which means cash book balance because of this would have been higher. Because they are deposited already, the entry would have been made in the cash book, because of which cash book balance would have been higher. Anyway, the starting point here is going to be cash book balance, whatever it is. And cash book balance is already higher. If it is already higher, what we are supposed to do? Deduct. So one by one, 44 lakhs 75,000 we have to deduct less. $44 lakhs 75,000. Next, second one, checks issued but not yet presented for payment. Again, there is no problem here. It is a reconciliation item. We issued means cash book would have been credited with this amount. You would have recorded that. Bank would not have recorded that because people have not presented yet that yet. So because of that, cash book balance would have been lower already. If it is already lower, what we should do? Add, because the starting point is cash book. So 35 lakhs 62,000. Next, Bank charges debited by the bank but not recorded in the cash book. Now we can record them. Now we can record them because we are anyway preparing revised cash book. Bank charges means it is a withdrawal. So definitely they have to be credited 12,000. How much? 500. Correct. Dividend directly collected by the bank. Means bank would have recorded that. We did not record that so far because we didn't know. We came to know about it now only. So now we can record that 1,25,000 in the revised cash book. Dividend collected means it is a deposit. 1,25,000. Then insurance premium paid by the bank as per the standing instruction not intimated. Means again this is opposite of that. Bank would have paid insurance premium of 15,900 directly from our bank account to the insurance company. So bank did the right job. We did not record it in our cash book because we don't know that yet. Now we know it. Now we can record it. 15,900. It is a payment. It's a withdrawal. So 15,900 credit to the cash book. Then cash sales wrongly recorded in the bank column of the cash book. Cash sales. Sales means they would have been debited to the cash book wrongly. They should have been debited in the cash column, but wrongly they were debited to the bank column. So wrong debit in the bank column already happened. So in order to rectify the debit, what we have to do? Opposite, which is credit. 2,55,000. Then customers' checks dishonored by bank not recorded in the cash book. See, when the customer checks are dishonored, customer checks means we received the checks. We deposited them, already debited to cash book, but they are dishonored. So when we received the checks, we would have debited the cash book. When dishonored, we should have credited in the cash book, but we have not yet recorded that. Now we can record that. 1,30,000. The wrong credit given by the bank. So this is not what we can rectify in the cash book because it is not our mistake. We cannot do anything. Bank's mistake. We will intimate the bank and bank will rectify it later. But now it will become a reconciliation item. What is the first impact? Wrong credit given by the bank means first impact is passbook. Because of wrong credit, what happens to the balance in passbook? Increases. It is more because of credit, wrong credit by the bank. So passbook balance is already more. If passbook balance is already more, obviously cash book balance will be already less. It would have been lower. So when the cash book balance is already lower, what we should do? Add. That is 1,50,000. That's 1,50,000. So these are the items which are given. Simply all that we need to do is prepare the revised cash book and find out how much is the balance. Calculate it. 32,50,000 plus 125. You have to do the totaling and all exactly in the exams carefully. But here we are just taking it. So 29,61,600. Let us check this once again. 3250, 125 minus 12,500 minus 15,900 minus 255 minus 130. 29,61,600. That's all. After that, there are two things to be added. One thing to be deducted. This is a positive balance. So start with that. Add 35,62,000. Add 1,50,000. Deduct 44,75,000. So what is supposed to be the balance as per passbook? Favorable balance. That is 21,98,600. Favorable balance in the passbook means it would be credit balance. That's okay. That doesn't matter to us. It is a favorable balance. Once it is a positive amount, it's not a negative amount. It is a favorable balance. 21,98,600. That should be the final answer. 21 lakhs, correct? 98,600. That's it. That is the balance as per passbook. Also show the bank balance that will appear in the trial balance as on 31st March. One more point is also asked here. Of course, which balance will be shown in the trial balance? This balance will be shown in the trial balance. Whatever we prepared in the revised cash book, that will go to trial balance. It is our books of accounts. Passbook balance will not go to our trial balance. It is bank's balance. So it is not in our books. It is in bank's books. So which will go to trial balance? That will be 29 lakhs 61,600. 29 lakhs, 61,600. That will appear in the trial balance in our books of accounts. That's it. That is the other question related to BRS. That was question number 6. Now, let's move on to question number 7. Let's move on to 7th question. Prepare a bank reconciliation statement of Sri Hari as on 31st March 2020. That is the date. Balance as per passbook is 10,000 rupees. That is the starting point. See, when the passbook balance is given, we cannot prepare any revised cash book and all. So obviously we have to start with that. There is no option. So only BRS can be prepared. 10,000 rupees is the passbook balance. Should write full forms. Balance as per passbook. When nothing is mentioned, it is a positive balance. Don't assume it is overdraft and all. No need to do any such wild assumptions. If it is given balance, balance means normal balance. 10,000 positive amount. Next. Second point says, bank collected a check of 500 rupees on behalf of Sri Hari, that is our person, but wrongly credited it to Sri Hari's account, who is another customer. So there are two people with the same name. By mistake, bank did this mistake. Instead of crediting to our account, they credited to somebody else's account, whoever it might be. Name is same. So if we say Sri Hari account to Sri Hari account, then it will be confusing. Our account is supposed to be credited. Instead of that, they wrongly credited to some other account. So obviously it is a mistake by the bank. Because of this mistake, what would have happened? This first impact is in the passbook only, because bank did this mistake. Because of this, our balance in the passbook according to the bank will be lower, because they did not credit our account, which they should have done. Because of this mistake, naturally the passbook balance will be lower. So what we should do, if it is already lower, we need to add 500 rupees. Then, third point. Bank recorded a cash deposit of 1589 as a 1598. See, ideally, cash deposit means it is a credit naturally in the bank passbook. They should have credited our account with 1589. Rather, they recorded as 1598. So, by mistake, clerical error. So, what is the difference here is 9 rupees. 9 rupees they credited more, because of which balance as per passbook will be more by 9 rupees. Because it is already more, we have to reduce it. 9 rupees. That's it. Then fourth point. Withdrawal column of the passbook undercast by 100. All mistakes done by bank only here. Whoever is that clerk, they are doing mistakes here. It's okay. What we can do, we can just show them in the BRS and bring this to their attention. They will rectify it later. That is not our business. Bank has to do that later. But our job is to prepare BRS. So withdrawal column of the passbook means, withdrawal means debit. For bank, deposit is credit, withdrawal is debit. Whatever it is, definitely withdrawal column undercast means when you undercast the withdrawal, balance will be more. Undercasting means under totaling. The withdrawal column is totaled less. Means actual withdrawals are actually 100 rupees more, which is not recorded like that. So when withdrawals are undercasted, obviously balance as per passbook will be more by 100 rupees. So what we should do, because it is already more by 100 rupees, we have to deduct 100. That was fourth point. Fifth point. Credit balance of 1500 rupees on page 5 was recorded on page 6 as debit balance. So they again did a mistake. Bank did a mistake. All mistakes are by bank here so far. So actually it is a credit balance, means it is a positive balance. They recorded it as debit balance. They created a negative balance. The impact here is 3000 rupees, not 1500, because which is supposed to be a plus 1500, they showed it as minus 1500 in the next page. So the difference between minus 1500 and plus 1500 is 3000. Because of this, the balance as per passbook would have been lower by 3000 rupees. It is already lower by 3000 rupees. So what we should do? Add 3000 rupees. So this mistake of the bank has an impact of 3000 rupees, which is supposed to be a credit balance. They recorded as debit balance. Means they showed as a negative balance, whereas actually it is a positive balance. So naturally the total error here is 3000 rupees lower balance they are showing. Once it is already lower, we have to increase that by adding it. That's what we did. Add 3000. Then sixth point says the payment of a check for 350 rupees was recorded twice in the passbook. Once again, mistake by the bank. Payment of a check. Payment means again withdrawal. Withdrawal recorded twice. Withdrawal recorded twice means the balance as per passbook will be lower. So what we should do? Add 350. Because they recorded unnecessarily twice the withdrawal. Actually, withdrawal happened only once. So that's a mistake done by the bank. Since they recorded the withdrawal twice, balance as per passbook would have been lower by 350. Since it is already lower, we are adding it back. Now the last point says the passbook showed a credit for a check of 1000 rupees deposited by Sri Hari, another customer of the bank. So these people are confused with our name with another person's name because names are same. So what happened here is they showed a credit for a check of 1000 rupees in our account. Actually, it is not our money. It is whose money? Somebody else's money. Somebody else's check. It should have been credited to his account. By mistake, they credited our account. Means already the balance as per passbook because of this mistake would have been higher. So once it is already higher, what we should do is deduct. So 1000 rupees to be reduced or less. That's all. These are the points. So all that we need to do is find out what is the correct balance. That is 10,000 plus 500 plus 3,000 plus 350 minus 9 minus 100 minus 1000. So the correct balance should have been 12,741. Here what happened is we did not do any mistakes. There is no other delays etc. Also everything is fine. All these mistakes are by bank. But whatever it is, because of their mistakes, definitely balance as per passbook was wrong. So correct balance should have been 12,741. That is the correct balance. That should be there in our cash book naturally because we did not do any mistake. That should be the balance as per cash book. 12,741. That's it. That was question number 7. Now, moving on to question number 8, which was also a past exam question for 10 marks. On 30th September 2018, bank account of XYZ according to the bank column of the cash book, means our books only, was overdrawn to the extent of 8062. An examination of cash book and bank statement reveals the following. What is required here? You are required to show appropriate rectifications required in the cash book of XYZ to arrive at the correct balance as per cash book, that is our book, and also prepare BRS. So two things have to be done as usual. One is revised cash book or amended cash book, whatever we call it. Then a bank reconciliation statement. Of course, the starting point of the bank reconciliation statement has to be the balance as per cash book because that is what is going to be the resultant of the first calculation. So cash book balance will be the starting point. How much is that? We don't know. But whatever it is, certainly some items have to be added and some items have to be deducted. Let us see each of these items one by one. Starting point first of all is what? Overdraft of 8062. Overdraft balance as per cash book means credit balance 8062. That is the starting point. By balance brought down. Then comes each of the points one by one. A check for 11,14,000 deposited on 29th September was created later. Means which was created after 30th September for sure. Which means what? We would have dealt with that correctly. We would have debited our cash book. But bank did not do anything because it was not even deposited on 30th September. Nothing mistake here. But still, there is a timing difference. Because of which, first impact would have been in cash book only because we would have already recorded this. Because we deposited the check. 11,14,000 would have been deposited, means debited to the cash book. Because of which our balance as per cash book would have been already higher when compared with the balance as per passbook. So 11,14,000 cash book balance would have been higher by that amount already. If it is already higher, what we should do? We should reduce that. Means deduct that. 11,14,000 should be reduced. 11,14,000. That is the first point. Second point. Payment by check for 18,000 has been entered twice in the cash book. It is our mistake. We can rectify that. So because of this, what would have happened? Payment means we would have credited the cash book twice. Payments, withdrawals will be credited in the cash book. Twice it was credited. Means one credit was not required. So how to cancel that credit? Debiting it. So debit this cash book with 18,000 rupees. That is the treatment for second point. Third point. On 29th September 2018, the bank credited an amount of 1,15,400 received from a customer of XYZ, but the advice was not received by XYZ till the 1st October. Means we didn't know then. 1,15,400 directly received by the bank. We didn't know then. Now we know that. Now definitely we can rectify that, which is 1,15,400. Bank credited means it is deposit. We did not record that. Means we did not debit that. Now we can debit that 1,15,400. Next. Bank charges amounting to 280 were not entered in the cash book. Okay, fine. Now we can enter them. Bank charges means they are withdrawals. So 280 should be credited now. 280. Which were not recorded earlier. Now we are recording them. Then fifth point is that on 6th of September, bank credited 30,000 rupees to XYZ in error. It is not our mistake. We cannot rectify this error in our cash book. It has to be a reconciliation item only. That is a bank's mistake. So first impact is not with us. First impact is with the bank. Because of which passbook balance would have been more because bank credited by mistake our account. Passbook balance is more means cash book balance is already less to this extent. When cash book balance is already less to this extent, what we have to do? We have to add to the original cash book balance, which is our starting point. So first impact is not cash book. First impact is passbook. Then we have to check second impact because our starting point is what matters to us. Our starting point is balance as per cash book. So first impact when it happened in bank passbook, because of this mistake, bank passbook balance is more, means automatically cash book balance will be less. When cash book balance is already less, we have to add that amount, which is 30,000 rupees. That was point number 5. Then point number 6. A bill of exchange for 1,60,000 rupees was discounted by us with the bank. Bill was dishonored on 28th September, but no entry had been made in the books. So that means we earlier already made this money 1,60,000 rupees. We received this, but now it is dishonored, means we have to reverse that. Earlier we would have debited the cash book. Now what we have to do? We have to credit the cash book 1,60,000 because we did not record this dishonor. Of course, one more point to be noted. Definitely we would not have received 1,60,000 from the bank when we discounted that. It doesn't matter. Still we have to pay to the bank 1,60,000 only. The bill amount only has to be paid back to the bank. Whatever discount amount earlier was there, it is gone. That will be our loss, bank's gain. That's over. But we have to definitely pay 1,60,000 to the bank because the bill is dishonored. So that is 1,60,000. Now we are making an entry in our books of accounts as a credit to the cash book, 1,60,000. Next. 7th point says checks issued but not presented for payment for the up to that date, 13,46,000. Checks issued means we would have credited our cash book already. There is nothing wrong from our side, but only thing is they are not yet presented for payment. What we can do? We can't do anything. Bank also cannot do anything. It will stay in the reconciliation till they are presented for payment. So 13,46,000. What happened to that in cash book already? When we issued them, we would have created the cash book, because of which cash book balance would have been already lower by that amount, 13,46,000. So what we should do now? Add that 13,46,000 to the original cash book balance, whatever it is. So that is 13,46,000 to be added. Then 8th point is a bill payable of 2 lakhs rupees had been paid by the bank but was not entered in the cash book. So it was paid by the bank but not entered in cash book. So now we have to enter that. So 2 lakhs rupees we have to enter that. Payment means it has to be credited in the cash book, which was not entered earlier. Now we have to enter that. Also another thing is, a bill receivable for 60,000 was discounted with the bank at a cost of 1,000 rupees, which had also not been recorded in the cash book. We did not record that at all in the cash book. Of course, how much we would have received here? We would not have received 60,000 in the bank account or bank cash book or bank column of our cash book. How much should be recorded? Not 60,000. Only 59,000 should be recorded, which we did not record. We discounted that. We would have received 59,000 rupees from the bank, but we did not record that earlier. Now we are recording it, which is 59,000. So these are the various items which we already entered in the revised cash book, and accordingly we can also prepare the bank reconciliation statement. So let us look at the totals first. 2 lakhs plus 160 plus 280 plus 8062 minus 115,400 minus 59,000 minus 18,000 means 1,75,942 is the correct overdraft balance actually. It is a credit balance, means overdraft balance 175,942. Recheck that. $175,942 overdraft balance. So starting point will be overdraft. That doesn't make any difference. Only that starts with a negative amount. Remaining things we already know. What to be added, what to be deducted, we already have that. So start with minus 175,942 plus 30 plus 13,46,000 minus 11,14,000. 175,942, that is minus 175,942 plus 30,000 plus 13,46,000 minus 11,14,000. So 86058 should be the balance as per passbook, which is a positive balance actually. 86,058 should have been the credit balance, which is a positive balance, favorable balance as per passbook. Let us check that. 86058. Correct. That's what is the balance as per passbook or bank statement, whatever we call it. 86058. That's all. That was question number 8. Any number of questions, same logic, same methodology. Thought process is same. Points will differ. We should not remember the points. We only should remember the logic. And by the way, logic need not be remembered. It should be just known. How do we know that? Of course, once we identify the logic, we will forever remember that, forever know that. Second thing, with more practice, automatically the same logic will be used again and again, so that you will actually do it with a proper thought process rather than mechanically. So what is a big mistake some people do here is, they just do these things plus minus mechanically. That mechanical approach will give a problem for this topic. If the approach is a logical approach, no problem at all. 100 questions also, 500 questions also are there in front of us. We can just keep on solving them. They will be like this only, if it is a logical approach that we follow. But definitely, yes, what is the story of each of the points, we should definitely know that and understand that. Now, move on to question number 9. Prepare a bank reconciliation statement from the following particulars as on 31st March 2018. Debit balance as per bank column of the cash book. Debit balance means it is a positive balance. For cash book, debit balance means positive balance. So when we have a cash book balance, we can always prepare a revised cash book, whether asked or not. I would suggest that also. Whether asked or not, when cash book balance is given, you start with that. Because whatever errors are there, if at all, they can be rectified here itself. Then we can prepare a BRS. So, a revised cash book and a bank reconciliation statement as usual can be prepared here also. Obviously, what will be the balance starting point here? Cash book balance. How much is that? We don't know. That will be the resultant of first working. So, starting point will be cash book balance only, because that is what we are going to prepare, which is cash book revised. So, start with this. Debit balance of cash book as per the bank column is 18,60,000. Debit balance 18,60,000. We already took that. Then next point, checks issued to creditors but not yet presented to the bank for payment 3,60,000. So what happens because of this? We issued checks means we would have already credited our cash book. Withdrawal. In our cash book it is recorded. Bank did not record that. That's okay. What matters to us is what is the impact on cash book. First impact here is on cash book only. We would have already credited our cash book. Because of that, the balance as per cash book would have been already lower. So 3,60,000, to that extent balance of cash book would have been already lower. So what we should do, if it is already lower, we need to add that 3,60,000. Then this is done. Dividend received by the bank but not entered in cash book. It's okay. Now we can enter it. Now we can enter it. The received means it is a deposit. So 2,50,000 we can debit the cash book now. 2,50,000. Done. Interest credited by the bank means it is interest received, not paid. It is not charged. It is allowed. So credited by the bank means that will be debit for us. 6250, which we did not record earlier. Now we are recording it. 6250. You can debit the cash book with that. Then checks deposited into the bank for collection but not yet collected by the bank up to this date. That means we would have already debited our cash book with this, because we thought that these are all checks already deposited, because of which cash book balance is already higher. So what we should do? We should reduce it. So what happens here? The story is important. When we have deposited the checks, first thing first we will record in our cash book. Of course, bank column of cash book, which is bank account basically. That would have been debited already. Because of that, the balance as per cash book would have been already higher. But the same thing is not yet hitting the bank, because bank has not yet collected them. There is a difference. That is why there is BRS. So this 7,70,000 cash book shows a higher balance. Already it is showing a higher balance. That is why we are reducing it. That is 7,70,000 less. Then bank charges not entered in cash book. So if they are not entered earlier, now we will enter. What is there? Bank charges means they are withdrawals. So credit the cash book. Next, a check deposited into the bank was dishonored but no intimation was received. So check deposited means earlier we would have debited our cash book when we deposited that. Dishonored means ideally we should have credited that. Already means cancelled that. But we did not do that. Why? Because no intimation was there. Now we know that. Now we have intimation. So what we can do now? We can rectify this. So earlier what was deposited would have been debited earlier. Now to cancel that we have to credit the cash book. 1,60,000. Now, bank paid house tax on our behalf, but no intimation received from the bank earlier. Now we know that. Same way it is also a withdrawal. Bank paid means it is a withdrawal. We did not record that so far. Now we know that. So now let us record that withdrawal. That is 1,75,000. With this, we can find out what is the revised correct balance as per cash book. $17,80,250. That is the one here. 17,80,250. Then just two adjustments are there, plus and minus. So add 360 minus 770,000. So 13,70,250. 13 lakhs. 17,000, sorry, 70,000. 250. That is the correct balance. Of course, that is the balance as per passbook. So the passbook balance would have been 13,70,250 in this case. Let's check that. Should be there. 13,70,250. 13,70,250. So like this, you have to practice many questions. Of course, while watching this video also, you should solve them on paper simultaneously. It's not about any entertainment video that you are watching. So while watching this video, you should also solve it simultaneously along with me, and by applying the logic, by applying the same thought process what we are having in across different situations, whatever the logic it is, that has to be applied properly. Then, as I said, any number of questions can be solved. Let us restrict to 10 questions which are there, all of them from the recent examination questions and recent revision test paper questions. All of them are those questions in the ICAI website. Question number 10, the last one for today's session, and of course for the chapter also as a whole. Prepare bank reconciliation statement of RK Brothers on 30th June 2018 from the particulars given below. Now, bank passbook had a debit balance of 25,000 rupees. So definitely starting point is passbook. So what is required is BRS. So can we prepare any revised cash books, etc., etc.? No, we cannot. So we have to start with balance as per passbook only. That is the only choice. So let us start with the balance as per passbook. Debit balance means what? Passbook debit balance means it is a overdraft balance. So 25,000 negative, that is a starting point. What happens? Nothing happens, just 25,000 negative. That is passbook balance. Then there are some things to be added, some things to be deducted. Let us see one by one what are those. 10 marks question this is. So starting point 25,000 negative balance. Just leave it. Don't even think about the original balance. Everything afterwards has to be thought separately. Just what we have to think is, because of this, first of all, where will be the impact? If the impact is already on passbook, then we are okay with that, because that is the starting point for us. And what is that impact? Will that increase the balance as per passbook, or will that decrease as per balance as per passbook? If it already increased the balance as per passbook, we have to decrease it, we have to deduct it. If it already decreased the balance as per passbook, we have to enhance it, add it. Only two possibilities. So look at the items one by one. Second point, a check worth 400 rupees directly deposited into bank by a customer, but no entry was made in the cash book. We cannot do any entry in cash book now, but definitely the impact is here in the first place in bank account only. Means bank passbook only, directly deposited into bank. So passbook has recorded this. Bank already has recorded this, because of which the bank balance as per passbook is already higher. So when it is already higher, first impact is in the passbook only, already higher by 400 rupees. What we should do? We should just deduct that. So deduct 400. Next, out of the checks issued worth 34,000 rupees, checks amounting to 20,000 only were presented for payment, which we have to understand. Means 14,000 rupees worth checks are not yet presented for payment. They are not yet presented for payment. Here the first impact is not in the bank, it is in the cash book. So in the cash book, we would have already credited the 20,000. We don't have any issue, because these are okay. We already entered, bank also entered, so we don't have to worry about this 20,000. Problem only comes with the remaining 14,000. 14,000 rupees worth of checks we would have already credited the cash book because we issued them. That means withdrawal already recorded in the cash book. Means cash book first impact happened, because of which the cash book balance would have been already lower. Then we have to see second impact, because we are talking at passbook. That is the starting point. So if cash book balance is already lower, passbook balance will be higher. So passbook balance is already higher by 14,000. When it is already higher by 14,000, all that we need to do is now reduce that by deducting it. 14,000 to be deducted less. That was third point. Fourth point, a check for 4,000 rupees received and entered in cash book, but it was not sent to the bank at all. Means this is also first impact is in cash book. Received and entered in cash book means cash book balance would have been higher. It was not even sent to bank. Bank doesn't know about this. So bank did not enter anything in the passbook. But cash book already entered this. Cash book balance is higher. Because bank did not enter this. Obviously the opposite happens with the passbook. When cash book balance is already higher, passbook balance will be lower. When passbook balance is lower, what we have to do is add. How much? 4,000 rupees. Add 4,000. Then, fifth point. Checks worth 20,000 rupees had been sent to the bank for collection, but collection was reported by the bank as under. So 20,000 total, we have to observe that. What is the date on which we are preparing this BRS? On 30th June 2018. So, on before 30th June, only 14,000 checks were collected, which is okay. That means we don't have to worry about them at all. There is no reconciliation, nothing wrong with that. So, only problem comes with what? These two other checks, which were not yet collected on 30th June. So, they are sent to bank for collection. Means, in the cash book, we would have already debited, because we thought we already got the money, but bank did not credit it yet because they are collected later on. So what happened here? First impact is again on cash book. Cash book balance is high because of that. Passbook balance is low because of that, since they are not yet collected. Since passbook balance is already low, we have to add that 4,000 and 2,000. Oh, this is a problem. Zeros are going. $4,000, $2,000 both have to be added because they are not yet collected by the bank, because of which the passbook balance would have been lower. So we have to add it now. Next, bank made a direct payment of 600 which was not recorded in cash book. Of course, first impact is bank only, because bank made a payment, bank would have debited it. So passbook balance because of this would have been lower. So what we have to do? Add that 600. First impact is passbook only, so we don't have to worry about cash book. Since bank made a payment, bank would have debited its passbook. Means it's a withdrawal. When withdrawal happens, naturally the balance will go down. Balance already is down according to the bank passbook. So what we did? We have added that 600 rupees. Okay. Next, interest on overdraft charged by bank 1,600 was not recorded in cash book. We cannot rectify anything because we are not preparing any revised cash book here. But yes, there will be a difference between passbook balance, cash book balance. Because of this, bank recorded this. When bank recorded this interest on overdraft, bank would have debited the passbook because it is a withdrawal. Because of the withdrawal, bank balance as per passbook is already lower. So what we have to do? Add 1,600. I'm just adding here. $1,600 to be added because bank has already recorded that, because of which the balance as per passbook would have been lower. If it is already lower, we have to add. So that's what we did. Then 8th point, bank charges worth 80 have been entered twice in the cash book, whereas insurance charges 70 rupees directly paid by the bank was not at all entered in cash book. These two are different things. Let us not get into that. One shot. Separately we have to look at them. Bank charges 80 rupees was there, bank also recorded that, cash book also recorded that, but it's a mistake of cash book. So what happened in the cash book, these bank charges were recorded twice. When bank charges were recorded unnecessarily twice, cash book balance would have been lower, which means passbook balance would have been higher by this amount, though it is a mistake, but the impact is that when passbook balance is already higher, what we should do is reduce, because our starting point is passbook balance. If we prepared a revised cash book, we would have rectified this, but we are not preparing. That is why we cannot rectify this. We have to just show it in the BRS. So 80 rupees twice entered in the credit side of cash book, because of which the cash book balance would have been lower by 80 rupees, and obviously passbook balance would have been higher by 80 rupees when compared with cash book. So once it is already higher, we have to just deduct that. That's what we did, 80 rupees less. Then second thing is different. Insurance charges for 70 rupees directly paid by the bank was not at all entered in cash book. So cash book is not the first impact. Passbook is the first impact, because bank recorded this. Directly bank paid this. That means passbook balance is already lower because of this, because bank recorded this. But cash book balance is higher. But we don't need that. Why? Because we started with passbook balance only. Once the passbook balance is already lower, all that we need to do is add 70. Because we are not preparing any revised cash book, we don't need to know the cash book impact. What is the impact on passbook? That is enough. In the passbook, already it would have been debited. It would have been already shown as withdrawal, because of which the balance as per passbook would have been already lower by 70 rupees. Now we have to add that back. Now the ninth point says the credit side of the bank column of cash book was undercast by 2000. See, credit side of the bank column of the cash book was undercast by 2000. When the credit side of the bank column of the cash book is undercast, what happens to the balance as per cash book? Withdrawal side, credit side means if that is undercast, balance as per cash book will be more. Balance as per cash book is more means automatically balance as per passbook is less. Our starting point is passbook. So first impact is on cash book, but that is not enough for us. We need impact on passbook. So second impact, which is on passbook, is that 2000 rupees the passbook balance is lower compared with cash book. So once the passbook balance is already lower, what we have to do is add this 2000. So these are the various items to be added and deducted. So just do the calculation and find out the final answer. But start with minus 25,000. Minus 25,000 plus 4,000 plus 4,000 plus 2,000 plus 600 plus 1,600 plus 70 plus 2,000. Minus 400 minus 14,000 minus 80. So finally the answer should be 25,210 minus 25,210 minus. Okay, already we have this here. So 25,210 negative. That means overdraft balance as per what? As per cash book. So cash book balance, we can write in the bracket overdraft, but just show it as negative balance. 25,210. That's all. That should be the final balance as per cash book. 25,210. Okay. So that is the same answer, 25,210. So this is how the adjustments have to be made. Starting point is important to be kept in mind always. And impact, first impact, if it is on the starting point itself, we don't need to worry about the second impact. But if it is not on the starting point, if it is on the other book, then first we have to see what was the first impact, then second impact will be automatically opposite of that. So depending upon the second impact, we have to treat it. So if that impact is making the balance higher, we have to reduce it. If that impact is making the balance lower, we have to add it. That is how bank reconciliation statement can be prepared logically, without remembering anything, without by hearting anything, and not solving the questions mechanically, purely and purely by logic and purely applying common sense, and whatever happened actually, whatever is the reality as given in each of the points has to be just acted upon. But once again, I will repeat, you have to be patient enough to read the question carefully, point by point, and you have to spend time on actually understanding and imagining what would have happened in this particular point and what was the first impact. Is that enough for us to treat it? If yes, treat it. If no, identify the second impact, then treat it. So this process has to be followed. If this logical process is followed, any number of questions can be solved, any type of question can be solved. Absolutely, this chapter will give us, should give us full marks. Hopefully, you all will practice these questions well. Don't do them mechanically, only do them with logic. Only logical working will help you in solving any type of question. If anybody is only interested in plus minus, most of the times they will get the answers wrong. That will never work, and that will not give you any full marks also. Ultimately, people will come out with a kind of confused mindset. No confusion is required here. Absolutely everything, whatever is given in the question should be clearly thought. And there are only two things always: debit, credit, debit, credit. In a bank account, there can be deposits, withdrawals, deposits, withdrawals. There is nothing else. There is no other possibility at all. Either it is a deposit or it is a withdrawal. The difference is, if it is a deposit, if you are recording that in the cash book, we will debit it. But if it is recorded in passbook, the bank will credit it, because these two are opposite parties. Whatever is debit for us, it will be credit for the bank. Whatever is credit for us, that will be debit for the bank, because we two are different parties, opposite parties. So that is the only point. That logic, if you understand, anything, any type of question can be solved comfortably and full marks can be obtained here. Hopefully you all will practice these questions well and definitely obtain full marks for any question that appears in the examination related to bank reconciliation statement. See you in another session. Till then, take care. Bye bye. Thank you very much.